Today's episode is brought to you by FinBite Insights. So this FinBite Insight is started by Alvin, and that's me. And each day I will articulate my thoughts about the financial markets. Just by reading in less than 3 minutes, you will be able to get a very good understanding about what's going on, what's the most important thing that you need to know about the financial markets for that day, and how do you interpret it so that you can make better investment decision out of it. So do remember to go to finbiteinsights.substack.com and you can subscribe it for free. Start enjoying the daily insights that I'll deliver it to your inbox.
Hi there, this is Alvin from Dr. Wealth. Warren Buffett and Charlie Munger have just conducted the Berkshire Hathaway AGM for 2023. And of course, like the rest of the AGMs, they are always full of investing wisdom. And I want to focus more on investment ideas that are more actionable for investors like you. Sit back and I'll review this investment idea one by one. So the very first one is take some profits. Okay, so Warren Buffett appeared to be more bearish going forward, even though he make it sound like it's always optimistic about the future. But in his own words, he did say the majority of our businesses will report lower earnings this year than last year. So he would expect fundamentally the business to do less well. And the actions also follow his words because Berkshire Hathaway in Q1 this year has been selling more stocks than it is buying. So it is a net seller of equities worth $10.4 billion. So that gives us a little bit of idea that maybe it's time to look at our portfolio and review what are some of the stocks or positions that we can trim. Hopefully there are some profits that we can take off the table rather than just leaving them in open. And if really the bearishness sets in again, the market may be due for a correction. Number two, hold some cash. And it is not surprising because Berkshire Hathaway has always been holding a lot of cash over the years. But as of Q1 this year, the cash pile has just increased again as compared to the end of 2022 by about another $2 billion. So it seems like Warren Buffett is still waiting for opportunity. He doesn't see a lot of compelling ideas to act on this year so far. So maybe that is something that we should also consider, right? Have some cash as opportunity fund in case the market comes down. We're able to buy stocks at better prices. Number three, buy Berkshire Hathaway. So Warren Buffett has been doing share buybacks, right? Which means using the company cash in Berkshire Hathaway to buy Berkshire Hathaway shares. In this case, the number of outstanding shares actually reduces and the per share value goes up. So why does Warren Buffett do this? Because he believes that Berkshire Hathaway remains undervalued. And this share buyback has happened over the years, and even recently he's still doing share buyback. So that tells us that he thinks that Berkshire Hathaway it is still at a good price for investors to consider. And it's not a bad consideration because Berkshire Hathaway is a rather diversified and defensive kind of stock out there. Number four, buy Japan stocks. So recently we've also seen Warren Buffett travel all the way to Japan. We rarely see he travel out of US, but he did so for Japan in search of better investment opportunities. And we also know that he had invested in 5 Japanese trading houses like Mitsubishi, Mitsui, and the likes of it, right? So he did mention again during the AGM that he will be keep looking out for opportunities in Japan. So maybe there are some value stocks to hunt for in the Japan stock market should you be interested. Number 5, hold Apple stock. Apple currently is the largest holding for Berkshire Hathaway's investment portfolio, and Warren Buffett remains in love with the stock and he believes that it is the best business among all the other businesses that he has owned. So it is very unlikely that Warren Buffett is going to sell Apple in the meantime, and he isn't buying aggressively too. So it tells us that maybe Apple is a good stock, but at the current prices, maybe it's not worth buying Apple. But it's definitely a stock to watch. Number 6, given the banking crisis, Warren Buffett has been quite vocal about it, and he definitely didn't like what he's saying. He feels that the bank's executives should be held responsible for most of these failures. Otherwise, these kind of problems may repeat again in the future. So Warren Buffett was quite disenchanted by the bank management, and he used to own a lot of banks under Berkshire Hathaway. But over the years, they've sold like JP Morgan, Goldman Sachs, Wells Fargo, and now currently he only holds Bank of America. And that was because of some sentimental reasons, because they originated the deal for Bank of America and he likes the management. And that's the only bank he had left compared to the rest which had been sold way before the crisis. So he is still quite shrewd in his analysis. He felt that something was amiss and eventually something would go wrong. And even now, he thinks that banks are not worth buying. Number 7, avoid EV stocks or electric vehicle stocks. So Tesla has become like a very popular stock over the years, and Buffett and Munger have not bought into Tesla before, and it is not going to happen in the meantime. And the key reason is because Buffett feels that the EV industry is going to be very competitive. There will be a compression of margins and there will not be a winner, even though all of us can see that EV is the future. But that doesn't mean that there is going to be a clear winner in this competition itself. And that's why Buffett avoided it. And in fact, Buffett has been selling BYD, the electric vehicle brand from China, and selling still continue, right, since from last year. So it is something that is consistent with, right? He's probably thinking that he might not even know BYD is going to win, even though it is currently in the leadership position. So actually, Warren Buffett is quite forward-looking in his way of analyzing businesses. Number 8, avoid the AI hype. Artificial intelligence now is all the vogue. Media has been talking about it every single day. There are a lot more players coming into the industry. Every big tech companies also want to get into AI because otherwise they will fall behind. But Charlie Munger said that I'm personally skeptical of some of the hype in AI. I think old-fashioned intelligence work pretty well. So I think a lot of investors will find it, they are just outdated, they are not up, they don't understand the impact of AI. To be fair, they did admit that AI is going to disrupt industry, it's going to change massively how we work. But again, they just feel that there's just too much hype on it. Probably a lot of that over-optimism is priced into a lot of the AI-related securities and stocks. So they are definitely not as rosy as what investors have been predicting. So it is true that there is going to be some improvement, but again, who can tell the winner? Just like the EV industry is very difficult, right, at this point in time. So that is why they probably avoided it altogether. Number 9, avoid cryptocurrency. This is not new. They've been talking against investing in cryptocurrency. They think that it's pure speculation. And interestingly, there was a 13-year-old that asked about whether cryptocurrency like Bitcoin could replace US dollar as the reserve currency of the world. And of course, Warren Buffett said, let's forget all the toys. It's a joke to think of any tokens, that's madness. So he definitely still have a very negative impression about cryptocurrency in general. Number 10, avoid commercial real estate. This is new, right? Warren Buffett and Charlie Munger have not really mentioned about this, but after some spectacular defaults in the commercial real estate in the US, they now feel that more bad news may come, right? There could be an eventual collapse in the commercial real estate. And that's likely caused by the rate hikes, right? In the good old days where interest rates were low, borrowing a lot to buy real estate was very logical, right? And it makes the books look good because of all the valuation gains as well. But now it's different. Interest rate has gone up to 4-5%. And rental has not gone up because of more work from home kind of situation. The demand for commercial real estate has dropped actually. So with interest rate going up, cost going up, yet the revenue is down, that squeeze a lot of all these commercial real estate developers and owners. So that's why he thinks that more bad news are likely to come from this sector, and it is definitely one to avoid. So I hope you have a better idea what Warren Buffett and Charlie Munger are thinking about investment in 2023 after watching this video. But there's one thing that you have to remember, okay? That is, I will quote Bruce Lee in this case, adapt what is useful, reject what is useless, and what is specifically your own. It is very easy for us to respect Warren Buffett and Charlie Munger because they are legendary investors. But their objective, their context, their situation may be very different from us because you think about it, Berkshire is investing billions and billions of dollars. There are many smaller companies or ideas that they will not be able to buy because they're insignificant to Berkshire Hathaway's billions. So for individual investors like us, we definitely have more investment options out there beyond the super mega caps they're looking at, right? There could be big caps, mid caps, small caps. There are definitely more ideas where they could make a difference for our investments. And also the second point is that Charlie Munger and Warren Buffett, they may have different circle of competency as compared to us. Maybe you are work in a particular industry or a sector where you have more knowledge than Charlie Munger and Warren Buffett. And that's where you may be able to spot opportunities that they would not be able to spot or understand. So you may have an advantage in certain areas. So I think at the end of the day, take the reference from what they have said, think for ourselves in our situation, and make the best decision that we can. So hope you like this video, give me a thumbs up and subscribe to the channel so that you'll not miss another video like this. I'll see you around. Goodbye.